Hello everyone and welcome to the latest annual eToro investment outlook. I hope you are all doing well. We've called it Prepare for the Power Shift. Hope you are looking forward to this. As always, please do like, share, subscribe. Let us know what you are thinking as well. And do remember that this is a marketing communication and should not be taken as investment advice, a personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. As always, we are joined by our experts, Brett, JP, and Neja. If you're on the podcast and you want to see them all do their wave to say hello, you can click the link and join us on YouTube as well. And also drop a comment. Let us know what you are thinking. We're going to discuss it all. It's been an incredible year. But before we get into our outlook for next year, JP, what stood out to you in 2024?
Yeah, there's four things that stand out. And the good thing already is that we believe that all four of these things will continue into the new year. So first of all, basically all asset classes performed well. Equities went up with the S&P 500 going up 26%, the Nasdaq 24%, but also Bitcoin, gold, wherever you looked, went well, perhaps except for bonds that lagged a bit. Now, the other thing that we talked about all year was the rate cuts by the Federal Reserve, the ECB, other central banks. Well, they did deliver. The Fed cut with 75 basis points, the ECB with 1%, and we believe there's more to come into the new year. The third point is also something we discussed a lot, is the sector rotation, and that's a positive thing. In the beginning of the year, it was all about tech. Tech still did well at the end of the year, but other sectors caught up. And that means that investors also look to diversify once valuations get too high. And the fourth point is that also due to Trump winning the elections in the US dollar strengthened. For example, compared to the euro, it went from 112 to 105. Yeah, and given the plans that the Trump government seems to have, this could also continue into 2025.
Thank you very much, JP. And if you are on YouTube, let me know in the comments what stood out to you. What was your highlight of this year? JP, just looking at 2024 versus 2025, I mean, year to date, some of those performances are just incredible, aren't they?
Yeah, this is a visualization of what I just said, with obviously Bitcoin standing out 5 times the Nasdaq. That gives also the risk return profile of a very volatile asset class. The Max 7 was obviously helped by stocks like Nvidia. The S&P 500 also, if you compare it to other countries, it was really an outstanding performance, much better than we hoped for at the beginning of the year. But you see it for the other asset classes, for example, private equity, real estate, but also China, Japan, everywhere where you put your money, you would have done reasonably well. Now, if we look into the first quarter of 2025, yeah, it's a bit of a standard agenda. When we were here a year ago, it was all about election year. Yeah, and now all the elections are over. So the thing that stands out here is obviously the 20th of January with the inauguration of Donald Trump for the second time as the 47th president of the United States. Well, we have a bunch of Fed meetings, ECB meetings. We have some geopolitical stuff with Poland, Brazil taking up chairmanship. Yeah, and obviously the earnings season. Traditionally, we always say unofficially, JP Morgan kicks it off mid-Jan, with Nvidia finishing it in the second half of February.
Yeah, markets never sleep. And just on the S&P 500, at the time of recording, it had made its 54th record close. The record is 1995, where it had 77. So it's very, very unlikely, I think, it can catch that, but still a remarkable year. Let's talk a little bit about 2025 then. What are the key drivers you're looking out for, JP?
Yeah, so if we say that the trends that we identified last year continue, what is new then? Well, the key thing that summarizes it all is that earnings projections that make us optimistic, but valuations make us cautious. That is really the key thing. Valuation for the S&P 500, for example, has gone up to 22 times forward earnings. Yeah, and that is much higher than the historic average. If you would make some calculations, you could say if the market would fall back to its historic average, Well, there's potentially some downside of some 15% from here. The key thing that is different that we get a new president in the US. It's been discussed already a lot. The key word of Donald Trump is tariffs. Yeah, and we all have to see because during election time, a lot is promised, a lot is said, but what will turn out to become also a policy? Well, we will know in a couple of months' time, and that brings some uncertainty for the markets. We believe that despite the uncertainty that the Federal Reserve, the ECB, other central banks will continue cutting interest rates. In the US, the Fed is now somewhere around 4.75%. The ECB is about 3.25%. But we see that going lower in a normalizing market. Now, during the year, when the Trump government has started, has talked to all foreign country leaders, we believe that we will see geopolitical relationships get much clearer. And that's also important because then we have a couple of years ahead with hopefully stable governments, although we have to see in Europe in a bit where that will stand. Yeah. But that should definitely help investors to be positive and be looking for risky assets. Now, the outsider, the wild card continues to be crypto. There's a lot of optimism in the crypto crowd because, you know, Trump would implement more friendlier policies, less regulation, which could benefit cryptos. However, we discussed it a lot in our analyst team, and we believe it's also very risky. You know, it's a multiplier against tech, for example. So we're not seeing it really as an asset class that everyone must be in, but it's obviously an interesting market to follow.
Yeah, absolutely. And it's a so sensational November for crypto. At the time we're recording, we're early in December, so there's still a fair bit to go, but remarkable, really, last sort of few weeks. Let's have a look at these polls then, JP. And we had a really good response. What stood out to you from this?
Well, it's a bit with a love. We always like looking at the polls. We were incredibly pleased that this time more than 3,000 respondents, filled in the polls. But the outcome is very similar from what we've seen before. You know, it's US all over the place. Well, can't blame them, right? If you look at our own outlook, if you look at asset classes, themes, it's always first is tech, second is crypto, you know, wherever you look. Yeah, and also with respect to sectors, you see tech standing out and energy, financials, and real estate lagging a bit. So that's where we have some work to do as an analyst team because we believe there's also chances to be had definitely in the more value-oriented sectors.
Yeah, thank you very much, JP. And thank you everyone for getting involved and voting. We love it. Let's get more than 3,000 next time out. Brett, let's talk about the US in a little bit more detail. We've underlined this with cautiously optimistic.
Yeah, when we look at 2024, it's been an amazing year. The S&P has done incredibly well. The indices have done great. We've seen this breadth expansion, which has been really what I think people wanted in 2023. They just didn't get it. We had the Magnificent Seven. 2023 was a great year, but it was driven by just a handful of stocks, mostly the Magnificent Seven. And when we came to 2024, we've seen so many more stocks and sectors participate. You can see on the graphic on the side here where 6 of the 11 S&P sectors are up more than 25% on the year. That's a really strong performance, and it really speaks to the expansion we've seen in this rally. And a big part of that expansion has been on the 3 main pillars, which has been the strength of the U.S. economy, the Fed's monetary policy of lower rates, and strong earnings growth from the S&P. And so when we turn to 2025, that's the big part of why we're optimistic is that we still see these pillars in place. The S&P is expected to generate double-digit earnings growth. The economy still remains on fairly solid footing. The labor market is also in a good spot. It showed a little bit of weakness, of vulnerability in the summer, but we've sort of seen that taper off and those concerns kind of die down a bit. And it does remain a risk in 2025. We'll touch on that in a minute, but the last one is the Fed, and the Fed has been on a path to lower rates, and they're expected to be on a path of lower rates in 2025. And as long as those pillars remain in place, it's hard not to be, too pessimistic on the U.S. But when we kind of look at the risks, there's the vulnerability that things, can deteriorate from where they are right now. We could see unemployment pick back up. We could see the Fed's fight against inflation stall, which would hurt the, rate cutting narrative. And we see, there's possibility for, some political uncertainty in there. We're through the election, thankfully, and we have a resolution there, but we could see things, unexpected, whether it's tariff related, whether it's regulation related. And I don't think that that's necessarily going to undo all the positives in the US. After all, the economy is really what drives, what's steering the ship. But, it can create these sort of, like I call them, pockets of volatility, where when something unexpected happens, we can have that knee-jerk reaction lower. Doesn't mean it's going to unravel the whole thing, but it can kind of create those, those selling opportunities that we see throughout the year. We can hop to the next one. And before we get into some of the themes for next year, it's worth noting that some of these pullbacks could be an opportunity for investors as well. On average, the S&P has 3 corrections a year of 5% or more. And a lot of times those end up being great opportunities for long-term investors. It's just about keeping your expectations in line with what's going on in the market. And, when we look to 2025 and we start to focus on some of these themes, I won't go into all of these in extreme detail just from a time perspective, but I think when we look at them, the AI theme continues to persist. In 2023, it was all about the chip makers and NVIDIA and ChatGPT. As we kind of turn this page into the second half of 2024, we've seen, a lot of talk about software, about cybersecurity names, and sort of how these companies that are buying these chips are actually utilizing them and turning them into products and generating margin improvements, increased revenues. I want to see if that continues in 2025. I think it will, but I want to see how it manifests with the software companies and their offerings. And when we look at home builders, the U.S. remains in a supply constricted environment with housing. Housing is difficult to obtain. It's expensive. High interest rates have not helped in that regard. And with interest rates set to move lower in 2025, there's this potential that we could have a supply constricted environment, which is good for price, not great for home buyers. And lower rates driving demand. So you kind of get this both catalysts driving prices higher. Could be a big benefit for home builders. A risk, of course, being we don't know how the tariff situation is going to shake out. That could kind of shake things up a little bit. But as of now, big picture view, home builder situation still looks good. When we look at small caps, I think the narrative with small caps has been that they've been a big laggard compared to the S&P, compared to the NASDAQ. And if we look at the move from the bear market lows, that is true. But if we actually look at over the past year, small caps have done really, really well. Through the end of November, they're actually the best performing US index over the past 12 months, which I think a lot of people, including myself, did not expect to see. So I want to see if small caps can continue to outperform in 2025. Lower rates should help. A strong economy should help, and earnings growth should really, really help. Expectations are really high for small caps. So let's see if they can deliver in 2025. And lastly is tech. Tech tends to be an outperformer when we look at the NASDAQ versus the S&P. The NASDAQ has outperformed the S&P 12 of the last 15 years, going back to the financial crisis. It's actually underperforming this year by about a percentage or two, but I expect tech to continue to do well in 2025. It is the sector with the best earnings growth.
Thank you very much, Brett. And for those on YouTube, if you're positive about the US, let me know why in the comments. And if you're negative about the US for next year, please do let us all know why. The US, of course, had a pretty incredible 2024. Europe, not as quite as good. Is it a bit of a crossroads measure?
Yeah, I would say that in Europe, we could say that there was a mix of challenges and opportunities in 2024, because if we take a look at economic growth, for example, it remained modest and GDP is expected in Europe area to be at around 0.8%. But talking of challenges, there were also some bright spots, because there is inflation that was once a dominant concern, but it declined from like 10% in late 2022. Now down to 2% in October 2024. So that was a success. And labor market is also still strong, with expected unemployment rate at about 6.1%. And it is even expected to gradually fall during the next year and into 2026. But this improvement was also driven by stronger supply chains and falling energy prices, and nevertheless by ECB tightening policy, which is now finally easing. But at the same time, growth was affected as well, and we could see that change in 2025 as Europe Central Bank pursue more rate cuts that could stimulate growth, and especially in those important areas, industrial hubs like Germany and Italy, where this manufacturing output fell significantly in 2024. But talking about these economic shifts, I think that Europe really offers some compelling opportunities for global investors that are maybe sometimes too overlooked, because lower equity valuation creates some attractive entry points for high quality European companies. For now, investor sentiment hasn't been the best in Europe, but that was due to geopolitical tensions, structural challenges, and all of these uncertainties. But market performance is telling us a different story. If we take a look, for example, at Germany DAX index, it is trading just 2% below its all-time high, and it is up 20% year to date. And this growth is driven by strong performance of some major companies like Rheinmetall, SAP, and Schneider Electric, even Siemens Energy that had some struggles in 2023. It is up more than 300% this year. So even despite some export pressures for companies like ASML, European market really offers some opportunities for investors, especially for those who are looking for long-term growth rather than short-term uncertainties. And I think it's worth mentioning European unique position between US and China, because both of those markets are very important for Europe, and United States remains Europe's largest trading partner. Nevertheless, US accounts for 19% of all European exports. And here Germany is leading in pharmaceutical and machinery exports. Meanwhile, China is also a very important market, especially for high value exports such as automotive and advanced machinery. And it is also a key supplier of those earth elements that are essential for clean energy and also for technological development. So I think that it will be crucial for Europe to navigate those relationships and new trade agreements that we have been talking about quite a lot recently, and to even diversify their partnerships with some other markets for growth in the future. Now, I would like to focus on some of the areas that I find interesting in that we are looking into 2025. First, we would like to focus on AI and technology sector. Maybe this is not the first sector when you think about Europe, but there is a potential lead in this global stage, because unlike United States and China, for example, Europe really prioritize ethics and sustainability in AI and tech development, because Europe is also investing in AI. They are investing around 20 billion euros annually into AI, but they are implying like really strict rules at the same time, like AI Act and GDPR. And with that, they are ensuring that it really serves community values, and it is building trust especially in key areas like health and finance. I think that great example here is German company Siemens, because traditionally this company is known for electrical engineering and telecommunications, but they strategically embraced artificial intelligence just to address those industrial challenges they are facing. And we can see many companies that are related to artificial intelligence, not just by developing it, but implementing it in various different industries. And here on this graph, we have presented just a few companies that are related with AI, and we can see that their growth in the past 5 years has been maybe overlooked, but we could say that it was impressive. Nevertheless, challenges remain also here in this part. First, we have talent competition and slower funding. So Europe really positions itself as a leader in this trusted AI scheme. And I think that this could be a future of European further development. And second area I would like to focus on is clean energy, particularly renewables like wind and solar. We have offshore farms in Denmark, Germany, and UK that supply over 1 million homes. And just to mention, one of the companies in the industry is Vestas Wind Systems, and this is only one of the companies that has potential to capitalize on further renewables development, and Europe is investing more into renewables, so there is a future into this segment as well. But as always, challenges remain, and one of them is securing those critical minerals such as lithium that is needed for batteries, for example, and strengthening partnerships with resource-high regions will be crucial for European further development. Final sector is infrastructure, because this is area where Europe faces challenges as always, but also tremendous opportunities that we cannot skip, because much of European infrastructure is aging, and Europe estimates that they need around 2 trillion euros to modernize transport, energy, and urban systems. And we know that this is just a base for further development of other industries. So companies like Vinci and Eiffage are leading in this sector, and they will be crucial for Europe in following years as infrastructure will be needed to update and to modernize. So if we sum up, we could say that 2024 really showed that Europe can handle all of the challenges, and at the same time show us new ways to grow that we haven't even expected. But I am expecting even more from 2025, because there will be probably more cuts from ECB, and there is a real chance to boost the economy and improve investors' confidence. And despite the challenges, Europe really remains the region worth watching, especially because current valuation metrics suggest that market overall could be undervalued compared to US counterparts, for example. And while some attribute these lower valuations to lower expectations of growth, this isn't the case across all of the industries and all companies. So as always, I think it is worth watching a broader landscape, and worth mentioning that there are specific opportunities that shouldn't be overlooked.
Thank you very much, Neja. And shout out to the ECB as well, getting inflation down from that high to where we are now. I think they deserve a little bit of a pat on the back. And I'm going to give a shout out to everyone listening on the podcast. Get over to YouTube and drop us a comment on what area of Europe you like, or a specific company. I will personally reply to you all. This is your time to shine. Thank you very much, Neja. We'll be back shortly for the Q&A. Just before we do get to that, JP, let's talk a little bit about the eToro 2025 investment outlook.
Yeah, Sam, let's wrap it up. The investment outlook for 2025. The key takeaway here is that we as an analyst team, we look forward to the third consecutive positive year for equities. However, we can't imagine, prices will go up even more than we have seen in 2023 and 2024. Yeah, and that's all due to the high valuations we see this year at year end. Yeah, but the climate is still good for risky assets. Think about it. You'll have moderate growth, you'll have lower inflation, lower interest rates. Yeah, equities, but also other asset classes, particularly at the point that this valuation for some equities becomes too high for some investors, and you see diversification into other sectors, into other asset classes. Yeah. Now, perhaps one of the things that we really want to mention is that, with interest rates going down, it's still a good climate for cyclical investments, rate-sensitive investments. But we believe somewhere during the year, this will turn around because central banks may pause for a while or slow the lowering of interest rates. And then investors, we believe, will be looking more into structural themes. Now, some of these themes have already been mentioned by Brett and by Neja. I've heard home builders, we've heard infrastructure, manufacturing in general, particularly if it's local manufacturing, is something that's really worth looking at from an economic point of view, following the economic cycles. However, we obviously also have the trade war going on, and that's the uncertainty again with Trump coming in. Yeah, that's a bit, who knows? Will it intensify? Will there be more export controls? Yeah, that could really hurt economic growth, and that may be, that it also hurts returns. On the other hand, with Trump, you never know. He's a deal maker, so he could surprise us and strike deals. What if the US would strike a trade deal with China and it would work? Well, then I don't know. Perhaps we will be more positive at the end of next year again. We talk a lot about rotation, like structural investment themes. But I think Neja mentioned that as well. We're still very positive on AI, although the differences will be big. Everyone is looking for the disruptive technology. Not all of them will be winners. But let it be clear, where we also look at diversification of sectors, we're still positive on the AI theme, simply because so much investment in the sector will spark a wider adoption. You'll see that coming at some point. And last but not least, because it's important for investment returns, the US dollar. As it stands today, we still believe, as I said before, that we see the dollar strengthening further. Perhaps, for example, if you compare it to the euro, it may even go to parity, which is not historically a big event. We've seen it before, but I think a couple of months back, that was not really expected. But the Fed may slow down the lowering of interest rates, and that could happen then. So the key thing, third consecutive positive year for equities, but perhaps less favorable than what we've seen before.
Thank you very much, JP. And if we do get a better 2025 S&P 500 return-wise than 2024, I think we should do this in Dubai, in the sun, all together this time next year, all paid for by eToro, of course. But look, that wraps that up. We've got our Q&A now as well. You should all, by now, answer these two questions. Brett, I'm going to come to you first for your first question. Is the Magnificent Seven still a good opportunity in tech, or should investors look elsewhere?
Great question. I think, when we go back to the prior US slides and we talk about some of the names that have been benefiting in AI, not just the chip makers of 2023 and 2024, but, now we're starting to see that expansion into software and into cybersecurity. I do think that those are two spaces that can continue to do well. We've sort of seen a lot of these high growth tech names left behind in the wake of, basically the Magnificent Seven's performance over the last, 1 to 2 years. I think we can start to see money rotate back into those, higher growth software names, cybersecurity plays. But that being said, I do think some of the Magnificent Seven names, do have some attraction to it. A lot of these names, so there's a few of them that haven't made new highs in almost 6 months, since the July highs. So I think there is opportunity there as well to have kind of a diversified tech approach.
Thank you very much, Brett. And all under a minute as well. So that's one tick for you. Neja, your first question. How can Europe capitalize on the US-China rivalry to boost its economy and global influence?
Yeah, I think that JP summed that up pretty well, because that is one of the uncertainties on the market for the next year. But I think that Europe can also leverage this position that it has between US and China, like to boost their influence and in the economy, maybe to present itself as innovative alternative and to attract investments into manufacturing and technology, and maybe into green energy sectors. But it is worth reminding that both markets are also very important for Europe. We mentioned how many exports go to the US and how many exports go to China. So it is still important that Europe balances these dependencies and at the same time try to leverage potential that it has from these opportunities that arise. So I think that this will be kind of one of the key themes of 2025 for European orientation.
Completely. And if anyone's listening from the UK, one of the top deal makers, get out to US and get us a good deal as well. JP, your first question. What is the outlook for small caps next year?
Yeah, small caps, let me build forward on what Brett told us. Small caps looking pretty good, and it should be able to profit from lower rates. It's also expected that they do better when there's deregulation. And particularly Trump may be more positive with respect to mergers and acquisitions. And that's where a lot of small companies are looking for, to be bought by a larger company, perhaps. Risk is in the supply chains, for example. It becomes increasingly difficult to get everything in order. But what I would like to say for people looking for small caps and the rebounds, if you look for rate-sensitive assets, also have a look at real estate investment trusts, REITs. We focus a lot on that at eToro. It's one of the categories that we believe stands out, perhaps even less risky than small caps in general. So REITs is the thing you want to be look at if you're also interested in small caps.
Thank you very much, JP. 3 questions done. 3 to go, 1 each. Brett, let's go for you. What is the US outlook for crypto regulation in 2025?
A nod back to JP, what he mentioned earlier, when the elections are going on, you hear a lot, you don't necessarily see a lot. And, that's a 2025 situation. What are we going to see when it comes to crypto regulation? What we do know is that the incoming administration has had a more friendly tone towards crypto. We know that the SEC is set to have a new chairman or a new chair. So I think that we will see a friendlier environment in crypto. We don't know what those regulations will be. If you had to say you're optimistic on regulation, that would imply you're optimistic on crypto, which I do think is the case, especially from the US's perspective. That being said, crypto can be incredibly volatile, so keep that in mind. When you're looking at your favorite coins.
For sure. Neja, your final question of the year. What does 2025 hold for Europe's strict AI, and how do their advantages compare with their disadvantages?
Yeah, as we said, AI is still one of the important themes on the market, and Europe here has a really unique position because on positive side, all of this regulation Europe possesses on AI really gives them a position of ethical AI leader in the world and making them a trusted hub for investments and talent. And this is something that they can leverage on, especially for industries that are really critical, like healthcare or finance, for example. But on the other side, for companies, regulations also pose challenges because overly strict rules increase costs for businesses, especially if you're a small business and you're trying to develop something new. Those regulations can also slow down some product development and create some unnecessarily hurdles for the companies. And this may discourage startups and small companies to start with their development in Europe. So to ensure success, I think that they really need to find the right balance between both, because as we saw, it possess both challenges and opportunities. And I think that they have to focus on this opportunity side and really to navigate this regulatory landscape in the future.
Yeah, all about finding that balance. 12 months. 4 annual or 4 investment outlooks, 1 annual video, and it all comes down to this question, JP. What are the do's and the don'ts for investors for 2025?
Yeah, the don't is, I believe, standing along the sidelines. Is going to be an amazing year again with lots of opportunities. So, be flexible and look around for opportunity. There will be a lot. The do's are on one hand, follow the trends. Like we said, we believe a lot of the good from 2024 will continue into 2025. However, we call the presentation Power Shift, and that is not without a reason. We have a new incoming US government that will be completely different than the previous one, and also have a majority in all the stages that are important to voting. So be prepared for changes. And that wraps up this video as well. This is our outlook for 2025 as it stands today. But should anything happen, luckily we have our complete Digest and Invest series. And if there's any news to share, please follow us and we'll update you there once things change.
I couldn't have said it better myself. JP, Neja, and Brett, thank you very much for joining us. Thank you, everyone.